Welcome to another episode of Inside Startup Investing. As always, I am your host, Chris Lustrino, founder and CEO of King's Crowd. Inside Startup Investing is the #1 podcast for learning about the best startups and investors in the online private markets. If you are a startup investor, this is a show for you. This podcast is powered by King's Crowd's proprietary rating technology that helps us to uncover the best founders and stories that you need to hear about before clicking invest. Now, before we get started, we want to thank our sponsor, LawCloud, the premier solution for founders to prepare to raise capital online. Whether you need to file a Form C, a Form 1A, or a subscription agreement, LawCloud provides the lowest cost, easiest to use toolkit for founders to make raising capital online easier than ever. Now, on to today's show. Hello, everyone, and thank you so much, as always, for listening in to Inside Startup Investing. Today, I am joined by Etan Butler, who is one of the major individuals that you need to know in the online private market industry. I almost think of them as like the operating system to the online private markets. Some of you may have heard of Dalmore Group. Others may not know that they exist, but have likely used them many times in your investment journey. This is a really cool company. This is one that's been around for a long time, is a stalwart of our industry, and is doing really innovative things to continue to help push the industry forward. And they have some really exciting new updates that are coming as well that we'd love to share with you all today. And we're going to dive into that on this episode. So Etan, as always, thank you so much for joining the podcast.
My pleasure, Chris. Thank you so much for having me. Great to be here.
Absolutely. So before we get into it, I think it's always helpful to just give a little review for those who don't know Dalmore Group and yourself. Tell us a little bit about you and what Dalmore Group does.
Sure. Etan Butler. I'm the founding chairman at Dalmore Group. We're a FINRA broker-dealer, very tech-driven, and we specialize in helping companies raise capital online through many of the exemptions that King's Crowd has been covering. And it's a relatively new industry still, even though to us, it feels like we've been doing this forever. There's 1,500 Reg CFs done last year, and there's 30 million companies. I mean, there's certainly feels like we're just at the beginning of this, and that's really what we're focused on, is really helping companies, with the different tools that are available to them, both the exemptions and the technology that allow for them to raise capital online to help grow their business.
Now, people have probably are thinking, I've heard of Republic, I've heard of WeFunder. What is this Dalmore Group? What is a broker-dealer? I don't necessarily know what that is. Can you explain exactly what a broker-dealer is and how that might differ a bit from, the traditional platforms that they know of?
Yeah, a broker-dealer is a regulated entity registered with FINRA and the SEC, that's generally in the business of facilitating the sale of securities. And in doing that, you have to do so in a very compliant, supervised way, where everyone needs the appropriate licenses, where the things you do, you have to be approved for. Ultimately, it's designed to bring order and hopefully protection as much as possible to investors, with transparency, with disclosure, with regulation, et cetera. As far as some of the other, crowdfunding platforms that are out there, specifically, let's say, Start Engine, Republic, WeFunder, et cetera. These are platforms that build communities, and hopefully that community is helpful to issuers that sign up and get listed with those platforms. Our model is very different. Our model isn't sign up with us and expect a lot from our community, as appealing as that might sound. Our model is, we're gonna help you, raise capital for yourself. In other words, we're gonna help you with the technology you need, with on the regulatory and the compliance and the advisory side that you need, to hopefully position yourself to raise capital from your own network of customers and fans and followers, and to be able to market your capital raise, your offering, to the general public. And so we focus on what is working for others who are doing so successfully, and what isn't. And so we're always refining that process.
Got it. And yeah, so for, if you've ever gone to an offering page and it's literally kind of what I call like your own independent website, right? It almost looks like you're just on their website And now you have this ability to invest and own a piece of this company. A lot of times it's powered by a broker dealer like Dalmore Group that's enabling them to do that. And it's often a lower cost, easier to use option for founders and allows them to get the most out of their own community, right? Rather than leaning on an outside community and paying a higher fee for that. But Etan, I know that you guys created a new kind of innovative all-in-one capital raising solution that you're really excited about. And I'd love for you to tell us more about what it is that Dalmore just launched.
Yeah, thank you. I am super excited about it. We recently released an updated website that really focuses and showcases our technology in particular. We've been at this since 2005, over 18 years, I think, and we were relatively early on some of the Jobs Act exemptions like Reg A and E 506C and Reg CF, we observed in the 1,000 companies plus that we've onboarded, including almost 300 Reg A clients that we've signed up. We've had a chance to sit back and observe, what's working, what isn't. And that applies to marketing and promotion, that applies to technology, and it also applies to the cost that's involved, right? And we saw an opportunity to work on, the technology side of this equation. To bring something that we felt was hopefully the fastest and the most secure and the most comprehensive, both on the front end as well as on the back end for analytics, at a cost structure that works hopefully for everyone, including cost-sensitive issuers like real estate, like REITs, right? These are yield issuers. So the objective was to bring the technology cost down, to bring the transactional cost down, the per investor cost down, to really make this sustainable. And we spent a lot of time building this, and it was very hard for me not to share this until it was done. But here we are today with the website that I was personally very involved with, along with many members of our team, and it's been a lot of fun. It feels like it's like if you look at our sites, the design, the different components that go into it, we had a lot of fun. It was a very creative process. And we've had tremendous interest in our products. They include Dalmore Direct, which is a invest now button that we put on your website. And it also includes Dalmore Fraction, which is a white label app, right? An iPhone app, right? That actually, it's that we set up for you as the issuer. And it gives the issuer the ability to focus on the operating components of their business, as well as the community building components of their business, where we handle the technology parts of the business, which we saw a big need for.
So your tentacles, I think, spread far and wide in ways that people may not even realize. And one of those things, right? So if you are a collectible investor and you use platforms like Rally Road and things like that, a lot of these fractional shares where you can buy small pieces of a large and expensive asset, a lot of that is in fact powered by Dalmore Group. So can you talk, Etan, about how you got into that and how you provide infrastructure underlying a lot of those really cool and exciting apps where you could go and invest in fractional shares of real estate and collectibles and the like?
Absolutely. And as you know, this is my favorite usage of this exemption. Again, I look at, let's say, Regulation A as really it's a tool that allows for issuers to determine their own share class structure, valuation, and process, and take that out to the masses. You could utilize these tools for a one and done capital raise. For example, I want to raise $20 million before I IPO, and many issuers do. But you could also utilize these exemptions on an ongoing basis, meaning you build community, oftentimes in an app environment that allows you to efficiently communicate to that community and give them the right UI, UX that people expect from their iPhones, on their iPhones today. But these fractional platforms that you're referring to, these are using the exemption to release an ongoing number of individual investment opportunities, be that Wayne Gretzky and Michael Jordan rookie cards and sports memorabilia, or fractionalized shares of racehorses, right, that could win races and hopefully, or single family homes or music royalties. It's called a series LLC, series structure, which is used with Regulation A. The role that we've played historically has been the broker-dealer of record, right? And for a number of reasons, these platform companies, they're all listed on our site, many of them are, they require the involvement of a broker-dealer for regulatory and compliance purposes, right? We do things like due diligence and review the investors, et cetera. And we saw an opportunity to provide technology to these issuers as well. And that's really been the difference. That's been the transition that we've been making over the last year. It's not just focusing on the broker-dealer side, but also on the technology side. That really brings best practice, for issuers to consider.
That's really interesting. So essentially what you've built is the ability to focus on building community and getting investors and really focusing on that side of things rather than focusing on the compliance and infrastructure side, which is all really hard and really costly, by the way, and then providing that in a really low cost, easy to use solution so that these issuers can spend more time capital raising and building community and less time doing the regulatory and compliance stuff. Is that a good way to think about this?
100%. You need three things for, talking about these fractional platforms, you need three things to succeed. One is you need a really good operating business where you could source, identify, close on an ongoing number of really of compelling opportunities that are going to bring value to investors over time. Otherwise, it's a novelty. Ultimately, you need to deliver to your investor base for them to, spread the word and hopefully, continue to support the platform. Second thing you need is you need to be a tech company, right? In this environment, the experience that I'm accustomed to from my iPhone, certainly post-COVID, is everything needs to work. Everything needs to feel like it's moving along. I can't, I shouldn't have to open up, and widen what I'm looking at and enter things in. It should all flow. So the UI UX really has to be world-class, and that really affects conversion and the experience of investors and that's expensive. The technology side, where you need, the cost of a US-based CTO, the cost of a development team, and then picking up, wiring this all on your own, with the different components that are needed, from payment processing to KYC to custody to ATS to escrow in some cases, all in a compliant way, could bring a lot of risk and expense and friction if not done the right way. So what we've been doing is building what we believe is the right way, and kind of wiring and the plumbing is kind of already in place with the vendors that we've observed are the most cost effective, the quickest, produce the best experience, and then licensing that out to issuers. That's going to bring hopefully more issuers to the market, make it easier for them, and be ultimately healthiest for the Reg A industry.
So this all-in Dalmore solution that you're now offering on a cost basis, what does it kind of look like? Like, what are your fees upfront and overall?
So interesting, on our website now, which is unusual for the industry, we list the pricing right there. And we encourage issuers to look at every option that they have that's out there. Look at them, the pricing for Dalmore Direct, there's no setup fee, and it's priced currently at $3,500 per month. There's no per investor fee, meaning there's no investor subscription fee or investor technology fee. Other platforms out there are $30 or $45. Even if you're at $30 and you have a Reg CF with a $500 investment, let's say average, $30 and $500 is that's 6%, right? Versus nothing. And so it's very easy to overlook the cost of processing. But we encourage issuers to model this out, understand what you're getting yourselves into, and what your alternatives are. And ACH, again, we're seeing 2% or more frequently. Our ACH processing fee is 0.89%, 89 bips. Wire processing, we're seeing, again, 2 to 3, 49 bips is kind of where we're currently priced. So that combination of not having a setup fee, of not having per investor fees, and having what we believe is way more reasonable processing fees, again, hopefully will make this a better solution, open up the industry to more issuers, including yield issuers, rate sensitive issuers. So really, that's that was kind of the driving force behind that, and to reduce friction, right? You have kind of a one-stop shop. where you don't have to take the risk of working with multiple entities. You have this as a solution.
Well, I think it's really important to be lowering the cost basis. And frankly, one of the reasons for that, right, is let's talk about some of the trends that you're seeing. So can we talk about some of the growth you're seeing on your platform? And I'd love to hear kind of, there's the traditional equity side and traditional raise side of things. And then there's this fractional side of things, which I know at KingsCrad we don't cover as much right now. But can you talk about what some of those numbers look like and how things are really kind of growing in your favor?
Yes. We right now we've signed over 270 Regulation A clients, and that number is growing pretty quickly. We've also signed, I believe it's more than certainly over 60, but more. I think it's more than 70 Reg A fractional share platforms. Those are and so that's really, Reg A is a spectacular exemption. For the following reasons. One is anyone over the age of 18 could buy shares in your company, and pretty much internationally, right, outside of certain, OFAC jurisdictions, et cetera. Next is the shares that you're buying are freely tradable, right? Meaning that a company could IPO an asset and then they could facilitate a bid and ask, right next to that process after the offering's done. Versus some of the other exemptions like Regulation CF and Regulation D that have a 1-year hold period. So you get anyone over 18, you get an immediate path to potential liquidity that is available, and you could raise up to $75 million a year. That's super interesting, and I think we're and especially in the environment that we've seen with Web3 and blockchain and tokenization and some of these non-regulated platforms, that if you want to play in the U.S., these are, at least today, considered securities, and you need to do so in a compliant way. And so, we're really bullish on the growth of Regulation A for those reasons. And we're, definitely blessed and grateful to be, at the center of it, both on the broker-dealer side and on the technology side.
Well, it's interesting. I can speak from personal experience, and if people could see my bookcase back there, I have a couple pins from Rally Road of collectibles that I own on that platform. And it has been amazing because once you buy an asset on a platform, for instance, like Rally Road, and there's many like it, you can sell it. You could do a secondary trade of it. I've probably sold about 30 assets, and I tend to just hold on to them until I see the green bar that says I'm up 30, 40, or 50%, and then I sell that asset. And on occasion, I've even had buyouts occur where I think I had a Patrick Mahomes rookie card that maybe I got in at a $200,000 market cap, and I think it sold for $500 or $600. Don't quote me on the number, but I did quite well. And it is really cool. You could have almost instant liquidity, which is unlike anything you've ever seen, especially in these private market assets. But let's dig in there. From a dollar perspective, what type of volume did you see last year? What type of volume do you expect to see this year from those 200 fractional share providers you work with?
The fractional share providers there's close to, I think, 70 or some odd, at this point. And the volume is really increasing significantly. I know you guys don't cover all of that currently. Of those 70, the ones that are live, don't quote me on this, but I think there's probably 18 or so or something like that, or maybe even less than that are live. This is a relatively new phenomenon. There's new ones going live every few weeks, and there's new issuers that are signing up and starting that process for SEC qualification and launch, right? So it's the fastest growing cohort of issuers that we've seen, for a lot of those reasons I had mentioned before. But the volume is very significant. I don't know what I could say. I don't want to quote anything, but you look at some of the issuers without mentioning names that are on our platform, and they're growing. And you could download the app to see for yourself kind of how many offerings they have and what's open, what's closed. On the real estate side, a lot of growth, and we're also seeing an uptick on the music fractionalization, and we're seeing a lot of music royalties, which we expect to grow. Art, it's been consistent because each of these issuers are building communities. Yeah. Right. And they're giving their investors the ability to invest in this, but not in that, build their own portfolio of exposure to assets. That's very different than another startup company that is, trying to raise capital and that hopefully will make it in a certain number of years. Here, you're buying something that's a bit more feels more tangible. It's a physical asset, right? So you have collectors. It's still a startup to an extent, but what they're offering investors to participate in typically are fractional shares of actual assets, and in some cases, they're performing assets like rental homes. Good luck going and managing a rental home and doing the fix-ups and collecting rent. You have a number of companies, or vacation rentals, you have a number of companies that have evidence that they've been able to do that over time and deliver returns back to investors. And so we're seeing a lot of increase in the growth of private alternative asset classes and investment opportunities. That's what's most exciting, because the private markets are a lot bigger than the public markets. But it's only been over the last short period of time that these exemptions really have been explored, are being made more well known. A lot of it has to do with the work that you guys are doing on your side, really reporting on that. That I think that helps investors increase transparency into what they're getting themselves into. It helps issuers understand that there's now analysis that's done on each of these offerings, and where they could go and see other comparisons in one location. So I think what you're doing, being as early as you guys are in the space, is also really interesting. And we love working with you guys.
Well, what I'm hearing is that this is truly kind of an emerging market, right? Especially when it comes to the fractional share stuff. We're just beginning to see this explosion of providers that are offering opportunity and access to all of these different asset classes, which from my perspective is so cool and so needed. So as that continues to emerge, one question that I wanted to ask you is just, are you starting to get a sense of, institutional interest or anything like that, like moving beyond just retail, but larger institutions are recognizing, like, wait a second, we have access to these new alt asset classes. This could be something that our own clients would want.
In two ways, yes. One is the sophistication of the issuer is increasing now that other entrepreneurs have observed the growth in the space, where it goes from someone with a great idea in a garage to super sophisticated issuers that are using these exemptions to unlock and increase return on advertising spend by having more investors participate in their offerings and bringing potential liquidity to them sooner. The other side is there is a insatiable appetite, from my perspective, from the managed capital industry, from RIAs, from brokerage accounts, that, again, didn't really have sufficient exposure to private alternative investments, right? Not every private alt is going to be on a platform. Not every private alt is going to make itself available to RIAs. The larger issuers, the ones that are in real estate, art, royalties, I think they're going to be first to really bridge that gap so that private alts are made more available to RIAs and ultimately could sit in brokerage accounts in an easier way. So I definitely think that's where it's going. That's one of the core focuses of Dalmore right now that we're doing kind of behind the scenes, is really wiring those circuits together to showcase issuers to RIAs, and for RIAs to be able to allocate client funds potentially to private alternatives.
I love to hear that. That's something I would personally like to see emerge, and I do believe we're seeing that as well, but nice to hear from your end too. One of the things that I've been really interested in, and I know it's a non-sexy topic, but I think it's one worth discussing, is I don't think people realize just quite how complicated payments are, and managing all these different forms of payment. The fact that you can invest in a startup or, a collectible with a credit card. I mean, this is stuff that was not done 5 years ago, right? Unless you had a check or a wire, you weren't doing it. And now we have all these different payment methods. Managing that in and of itself is very complicated. And there's another thing that I hear from investors that I do want to hit on, which is, I think people get a little, account fatigue, right? The literally the need to go and sign up and create accounts for all these different issuers that are offering investment opportunities. Is there anything you're doing on that front to try and make investors' lives easier? And can you give us a little more details on just the complexity of payments so people really understand, like, when things even do go awry, right? You're still an early adopter of this market. Why that might?
It depends on the issuer, right? If you are a yield issuer, if you're a REIT, you might not want to offer credit cards because someone's signing up with your platform, making an investment because they want to see a potential for yield, right? And the margins are pretty thin generally from the management perspective and the issuer perspective. They may encourage or unlock, kind of like wires or ACHs in that way. But that's why those fees have to be reasonable. Or they may have an integration for a digital wallet that gives investors the ability to make a deposit or link their bank account to that wallet, and then using that wallet, they then could invest in different, let's say, collectibles, et cetera. So it's a bit different based on the exemption. For a Reg D with a higher investment minimum, there's going to be lower credit cards. For a Reg CF with a lower investment minimum, let's say $300 or $500, whatever that might be, there's going to be a much, historically at least, the majority of the investments were made through credit cards because it's so easy to use, because they typically on your iPhone auto-populate. It's click, swipe, right? That's what we're all accustomed to. Whatever's easiest from a tech perspective. I think most investors out there maybe haven't ever done a wire, or certainly wouldn't want to go through the process of organizing a wire or going to their bank for a $500 investment. So the key is to, and this is the UI UX and a lot of the technology that we put into Dalmore Direct and Dalmore Fraction is the right integrations with payment processors. Specifically, Stripe has been integrated into both Dalmore Direct and Dalmore Fraction, and we believe that represents the fastest possible checkout time currently in the industry because of their technology. So it's incorporating with the right vendors and opening up depending on the exemption and the offering minimum, those payment methods. I think that's that we've been working on. The other thing we've been working on is we set up a transfer agency, and we're integrating that right now into our technology. And what that will do is it will allow for a investor who invests in one kind of like Dalmore back-ended offering, next time they want to invest in an offering, to be recognized, so they won't have to go through a similar process, which will reduce the friction and number of steps that are required for them to make an investment in an offering. So approaching it kind of from both ends, right? It's the right vendors and also it's the right process.
The reason I wanted to hit on it is because I think, as I look to the future of this industry, I think it's actually a lot of small, non-sexy things that actually help drive this industry forward, right? There's a lot of just little challenges and things or frictions that you run into as you start to really dive into this world. And as we kind of come to fix and improve on those things, like payments, it's just going to make this space so efficient, so intuitive, so easy to use for anybody and everybody, which I really personally think helps push the industry forward. And I think you guys are all doing a wonderful job of helping to push the industry forward. So last question for you here. What are some of the major kind of trend lines you see over the next, call it 2 to 3 years, playing out within kind of this new online private market ecosystem?
I think secondary is going to become more relevant. I believe that market making is going to become more of a thing for this exemption for certain issuers, sizable enough serial issuers, and also tokenization of blockchain are always something that I recognize brings certain value add components to it, but on the blockchain side, not necessarily so clearly today. So I think that as we see changes and more clarity on the regulatory side, the industry needs to be prepared for a move. Whether that's going to be a fast move, like a lot of these companies, I don't think it's going to be so fast, but it is something that we're certainly prepared for. I also think that anything that's crypto or Web3 or tokenization related sometimes comes off not necessarily in a positive way to a retail investor who may associate that perhaps incorrectly with Bitcoin or FTX, et cetera. So I think what's more appealing to retail investors from my perspective is that they're buying shares in something that's regulated. There's a transfer agent. There's the SEC involved. Hopefully that gives more comfort, than the alternative. But I do think that is an area over the next 3 years that we are going to see, more more growth in.
Yeah, agreed. And obviously, if there's liquidity, aka you can sell your shares and make money before an exit or IPO in 5 to 12 years of a traditional startup or even a traditional asset, that certainly will create a lot more interest and buzz in our market. So for those who are listening, I think one of the major takeaways, if you are a founder or you are someone who wants to create a platform where you can invest in fractional shares of any private market asset class, which is kind of this new emerging trend, if either one of those fits your profile, Dalmore Group is definitely somewhere you should go and check out their all-in-one solution that is very much a low-cost solution, and see what they have to offer. I think it's a really sleek solution and a very cost-affordable one, especially in this market. That's a major takeaway for me. And if you're an investor, it's something for you to pay attention to and understand more of the infrastructure that's at play that's enabling all of us to be able to invest in all these really cool assets, because without it, we don't have this industry. So Etan, thank you very, very much for all that you do for the industry, and looking forward to keeping the conversation going here.
Thanks, Chris. Be well, brother.
Thanks so much for listening. As I mentioned, Inside Startup Investing is powered by KingsCrowd. If you want to use the same tools I do to power your investment decisions, you can head on over to kingscrowd.com/startups to try out our Edge Pro Toolkit for 30 days free.